Hey YouTube, what's going on? Hope you guys are doing well today. It is July 23rd. Alright, so today was a green day for me. So there you go, you can see the journalytics right there. Your win rate, it says 91%. I had 23 trades in total. And let's go over the Excel document because I'll go a little bit more precise and you'll see each trade and the P&L for each trade. So I had two losers. You can see them right there clearly. And then a couple break evens here are basically like tiny losers. So I didn't really count these in my win rate. I only counted two of them in my win rate. So out of 23 trades, 19 I considered as winners. Generally a good day, profitable day. We're going to go in depth and look at some of the trades for the day here, trading the NASDAQ futures like usual. I trade the same market every single day, guys, because that is the way I do things. All right. So this is the recording of my screen today, July 23rd, 2020, and NASDAQ futures 30-second chart. This is what I look at on my main screen right here in front of me. Okay. So I just want to say one thing real quick is that these tapes, I've slightly changed them. This tape right here, I filter out 3 lots and above. So I've taken out the 1 and 2 lots out of that tape. So I only see 3 lots and above, essentially. 1 and 2 lots don't mean so much, but if you see a lot of 3 and 5 lots printing, that can give you some momentum, right? Because again, logically, if you see these bids and offers getting taken out, a ton of 3 to 5 or 7 lots, generally that's what's going to cause some movement in the market. Okay. And of course here we have the tape filtering at anything above 15, whatever you want to call them, institutional traders. These guys will throw out orders in the market to move the price or not to. Sometimes there could be like an iceberg at a certain price and you'll see a big order come in and then it'll trade lower or higher based on that order. So if you see a big buy come in and then we trade lower, that's a sign that there could be a potential iceberg sitting right at that price. Anyhow, so that's the kind of stuff I look at in regards to the orders coming in. But at the end of the day, your momentum and your current trades is going to be the most important thing you're looking at. So let's go ahead and look at some of the trades for today's action. And I'll try and kind of give you a general approach of my process. So when I approach the market to trade, I'm not sitting around waiting to jump on every little opportunity I see, because that's going to be a dangerous game at the end of the day. Okay, but what I'm really waiting for is I'm waiting for traders to jump into the market, and then I'm waiting for them to get trapped. All right, and this happens quite frequently. So you'll see a certain move happen, an impulsive move, and I want to see how the opposite side of the market is answering that impulsive move, because depending on how the market gets answered, you can have some of those traders that entered impulsively to get trapped, and that causes good opportunity. All right, so that's the kind of stuff I look for, or that's the way that I would describe some of the process. So you're going to see me here trying to enter a short position because I was skeptical of this little rally right here. So you're going to see how the market started to rally off of this 30 zone. I just want to show you how quickly that rally took place. Take a look at these 830s. We're trading right down. That's our point of control. Price that traded the highest volume. We trade down to the 28. And now look at the buyers, how they respond right here. So we see a bit of it coming in right here on the tape. And now look at how we start to trade a little bit higher. Look at these buyers. A lot of 5 lots, 3 lots. We're slowly grinding up, but not on a lot of volume. So we've just rallied from the high 20s. We've just rallied 10 points on not a lot of volume. So look at that. All of that right there, we just rallied all the way to 42. I was kind of interested in seeing how the sellers were going to answer this, because we managed to just grind our way back up to this moving average, or these 46s. Now I was curious at how the sellers were going to react. You're going to see me take a short position here after we see a little bit of inside bar action. So look at how we break to a higher high here, and you're going to see the sellers start to answer a little bit. Take a look at this, and we're sort of stalling out. From the short seller's perspective, the risk to reward is not so bad at this point, right? If you take a short off this moving average, and again, I'll be fading against these bulls right here that entered, because I'm skeptical of this little rally right here. So there we go, I entered the short, got filled at 44. We traded higher and then we traded lower. So that's kind of what I was looking for, and probably you're going to see me taking profit right here. And I got out at 40. Yeah, so that was a tricky one right there, you know, because I had the buy stop in the market. We had a swift move up and I got filled at 40, locking in only about 4 points of profit, where there was about 7 points of profit there. It's not a perfect world, but that was a winning trade. You can't complain. You can see how we rallied again, and I grabbed the short again. Look at that. So we had a nice rally, right? That rally is definitely going to catch some bulls on board. But again, where are we rallying to? Right back to the resistance that those sellers were defending before. So if they're still going to defend it, I'm still going to go short there. And again, it's all about fading against where the impulsive traders are entering the market. You guys starting to understand this? So there we go. You see me taking that trade, and we start to trade it a little lower. And I think I'm going to cut this one pretty quickly but look at how these sellers start to answer. So I got out at 40 again on that trade. So just in those two trades, managed to lock in a few points of profit, and then we sort of consolidated and broke to a higher high. So a good thing for being relatively conservative with these two shorts here, because if we're seeing these prices here getting defended, then there's no reason to really stay short. The whole thesis of the trade was that I was trying to fade against these bulls here, which means that if they were truly going to be trapped, we were going to have to see lower prices under here. So if we were not going to, then it would have made sense to just exit the short. So as a scalper, you're not here to stick around the market too long. You just want to lock in a few points at a time, and then you just keep watching, all right? So, and then the third time right there, we had a third chance, nice bull break, giving chance to those bulls. And then what do you know, yet again, we had a rejection, and the bears are doing it again, defending these 45s. And look at these sellers. The sellers have momentum at that point. I grabbed another short right off of that price, except this time, since it was the third attempt, look at how aggressive these sellers are. And we just locked in a nice 15 handles right there. I'm expecting a little bear break, but I think I'll take the profit right there. We'll see what happens anyhow. So that was a nice little winning trade. And I got filled. I got out of that trade at 29.50. So from about 45 to 29.50, call that about 15 handles. All right. So there's a couple trades for you. So a nice rally off the low. Sellers are still present. I get back short right there. Fading against these rallies. Same old idea. Get out for a bit of profit. And we see lower prices. Okay, here's an example of me being risk averse. Take a look at this one. So I entered the trade right here again on these sellers right there. Got filled at 24.25. That was not the greatest entry, because at this point what happened was we actually had a bear break under these 20s, and then we had a bull that defended it. So the short is becoming less and less likely at this point. So I consider this trade somewhat of an impulsive decision. I think I was getting a little greedy with this one, okay? So what you're going to see happen here is that the market trades higher. So I'm offside on this short. Now, what do I do since I'm offside on the trade? Well, I do what a responsible risk manager is supposed to do if you're offside on a trade by a few points like that, is I'm going to put in a buy limit right on my break-even price, so that if it ticks back down there, guess what? I don't lose any money. So that's called being risk averse when you're at a loss. And I discussed this in yesterday's video. So you're going to see me get out there for a break even, because I don't know what's going to happen. These bulls just might shoot this thing back up to these 45s, and I don't want to be short if we're shooting back up to these 45s. You get what I'm saying? This was the long trade towards the end of the morning session for me. So generally around this 790 to 780 area, this was the low volume price. Okay, so that was called the low volume node, which means it was the prices that we traded the least amount of volume at, therefore could act as a form of support. At the same time, if you zoomed out, this is a 30-second chart, but if you zoomed out in the 5-minute chart, we were in fact looking for a 5-minute or a 15-minute higher low as opposed to our current low of the day. So the most likely scenario was in fact a 15-minute higher low, and there was also a low volume node around these 790s to 780s. Okay, so you can see that briefly there on the volume profile. And what ends up happening is that we rally off this low, and I'm looking for a long trade as long as we can see signs that we're holding the support. Now, because of how extended this little rally was, I decided to see if I could fade it just for a couple of points of a scalp. All right, so what you're going to see here is me fading it down to about these 95s, 93s, and that was the area that I was actually looking to get long in, because the risk to reward for a long trade right there was quite good. So you're going to see the market fade. I get filled and I take profit on that little micro short. And now as we rally off that level, look at those buyers right there. You saw those buyers come in? 793.50, and sooner or later we're rallying and we're at 798. So I put in a buy limit, see if it gets filled. And I want to get filled there. So I get filled at 97.50, and my stop would have been under these lows here, about 10 points under. So these buyers, I was basically front running these buyers that had come in earlier here, because we are into a demand zone. So anyway, sooner or later we're trading higher. I'm a few points in profit, and based on my fill, I just was watching the market rally from here, and I managed to land quite a good fill right there. And sooner or later, we're trading at 8.14. So just keeping that stop at break even and just sitting back and watching the market, okay? So I put my sell limit at 35, because 35 was the next sort of clear resistance I could see on my volume profile. Now, as we traded higher, so this is me being about more than 20 handles in profit at this point, and I'm watching as we're trading higher. We're trading higher and higher and higher. Now, as I start to see these sellers coming in right here, so we broke to a higher high above this pivot, when I started seeing the sellers kind of getting a bit aggressive here is when I started to contemplate taking profits. So there we go. You saw me right there. I got out of that trade at 23.50 right there because I didn't like how these sellers were behaving. Look at all those sellers on the tape. A bunch of 3 lots, 5 lots, kind of aggressively selling that market. So again, I don't want to be long necessarily sitting through a pullback like that. I was happy with my 20 whatever handles of profit. So just to show you, take a look at what happened after. We consolidated, caught some buyers around the moving average, and then we just continued to consolidate. So these sellers were in fact defending these prices right around here. And see how this starts to look like a little bit of a bull flag. Again, that's what's going to get some retail buyers on board. And the fact that it looks like an obvious bull flag, guess what? That's the reason why it's more likely to fail if these offers continue to be defended. Look at these sellers, they're pretty aggressive, and then sooner or later we end up trading lower, almost all the way back to my break-even point. So moral of that story, guys, I've been in that situation more often than not. If you've got 20, 25 handles of profit, just lock it in. Don't sit there looking for 50 handles. If you got 25 handles, consider locking it in, all right? That's going to be it for today's video, guys. I hope you enjoyed. Take care. See you in the next video. Bye.